Good morning or good afternoon, depending on where you're at. Welcome to the How to Make Money Trading Stocks webinar for the active trend traders. Today, I'm going solo. Mike and Michael are out and about, probably enjoying the nice summer things throughout the world. I want to welcome everybody. I'm glad to see folks are joining us. Markets are doing some interesting things this morning. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. As you're learning a system, there's nothing that can beat paper trading. Just a little bit about me. I'll leave that up there briefly. I've been working with Mike Traeger as my research colleague for now, gosh, it's over 10 years now. Wow, how time flies when you're having fun. Anyway, Mike and I just really enjoy each other's company and badgering each other. Our objective of this webinar is to basically have a very timely, actionable intel review at the end of the week. This webinar is meant to be married with the after market Monday. Now I realize that our after market Monday, I've had to do 2 recordings the past 2 weeks because of travel arrangements, but I believe we will be back live on this coming Monday, where it'll really be live and not just the recording, or as they used to say, Memorex. We'll do a real quick stock review, market review, stock review, and then I want everybody to remember that, as you learn how to trade, you're being given the keys. And then the keys, then the thing is we have to learn how to open the door of the keys we've been given. Here's where we're sitting with the active trend trading and also the market as of about 9 o'clock this morning, up for the year, above last year's highs. And active trend trading, we just continue to add a little bit more every week, and to keep things moving in the right direction. Let's take a real quick look at what the indexes are telling us this morning. Okay, let's go over to the S&P. The S&P has been basically just kind of driving sideways here with some good support down here at about the 2420 level. It tried to break out above the 2446. This breakout failed. It was a failed breakout, and therefore, but it didn't retreat very far. Both either the 8 or the 20-day moving average, which is this one here, are holding up and representing support for this entity as it stands right now. As we look over here towards the as S&P has made new highs, recognize the new highs are not being supported longer term on the weekly chart, are not being supported in that we're getting some negative divergence here. Does that mean we're going to dive for the trenches with the S&P? Not necessarily. That would be out of character with what it's been doing for, gosh, the last few years. Yes, there are corrections, but they tend to be short and shallow. So again, while many of us would like to see a short and shallow pullback, what we have been getting in the S&P are just these, 1, 2, 3 days down, bam, rebound. That appears to be what we're getting right now. Those of you who are strategy 3 traders, as you're aware, I just shot out an alert recommending that we're selling premium in the SPYs, basically based on TSI tick up, momentum going up a little bit, and again, the trend being up. So we were selling, I think, the 243 puts that expire next week in that. So what else do we want to look at here? Excuse me. NASDAQ. Again, NASDAQ came right down early last week, or last part of last week, bounced off the 50, off of this uptrend line here, which turns out to be kind of an uptrending channel. It's moving up, has basically TSI tick up, broke up last 5 days, been up, and now it appears like it may be set to continue to press on up to the 5,900 level. That is the upward target of NASDAQ. We'll take a real quick look at the Qs because that's what that goes to. Did I do that correctly? I did. So that gives an upward target on the Qs of about 140, let's say 143.75, so not a lot. But if you roll in and you look at the TQQQQ, which is the leveraged index ETF, which we like to keep a watch on from where it's at right now. Let's say, you know, a pullback against this 8-day 820 combo, and I give about a 7 to 8%, 7 to 7.5% pop back up to the levels of resistance we're talking about. Go on to the Russell. The Russell, a nice pullback into support, and then a rebound and starting to take back up. We have a TSI tick up now as of today, and so what I'm going to be looking at over the weekend is, okay, how can we trade this entity? How can we trade the Russell via either IWM and or TNA to the upside to take advantage of this little bounce in the Russell? Looks like it may move back up to the upper channel. Again, that would be our target for a short-term swing trade. And if we think that this is going to continue to just swing on, you know, continue to move on up, because you can see it's an slight uptrending channel that has some issues. One, negative divergence over here on the weekly charts. Market forecast kind of tilting up a little bit. But at this point, it looks like it wants to get a good little kick up. Let's look at TNA just real quick. Am I going to buy TNA today? Probably not. But if I were to buy TNA today, based on, again, this True Strength Index tick up, I would have a very, you know, like a partial position, not a full position, and my stop would be down here below the 53.66 level, simply because that's swing low, now, which also correlates with the 50-day moving average. So swing low, give it, you know, 15-20 cents below that. But yeah, I mean, where do I prefer to pick it up? I prefer to pick it up right around the moving average itself, either the 8 or the 20. So that's what we've got going on with that. Again, we're moving very quickly. Our percentage of stocks above the 20-day moving average. Mike and I talked about this a little bit on Wednesday night. This is one of the triggers we utilize for the early warning alerts, but we're looking for it when the price action gets down here. The one thing I will highlight is the upper limits of this is, you know, at 100%, but typically if it gets above 80, that's when things tend to really slow down in the market. And what we've been noticing over the last, you know, a little bit over a year, that 80 doesn't even show up right now. So that tells us longer term that the upper limits on the NYSE has actually been dropping down. The percentage of stocks above their 20-day moving average, and so that shows weakness in that index, which is divergent from the strength we see in like the S&P, the Dow, and the NASDAQ, and that's partly because those are weighted indexes, weighted towards stocks such as Apple, Netflix, Google, or Alphabet as we call it now, and those FANG type stocks. And so again, nothing actually to do here with this particular entity, because we're, as I said, we're waiting for us to get down here. In the, oh gosh, almost 15 years of backtesting that we did on the early warning alerts, there was only 1 year where we only had like one trigger to get into the into a trade, and we have offset that this year so that we have courtesy trades, and we have, you know, we're up about almost a little bit over 5.5% in that particular account right now. So what's going on? Okay, stocks, ETFs, drop and recover. Looks like they are in the process of recovering, pushing back up towards their past highs. Nugget, I really like Nugget. looking towards base, it is basing for potentially its seasonal run. Seasonal run last year between July going into the latter part of September, which is when gold tends to get a run. There was an early entry if you were watching your intraday charts, or if you're watching towards the close on 621, there was an early entry at about 30.46, and that is up. If you did move in on that aggressive entry, you're up about a little bit over 10% right now. I'm waiting for, we put out an alert on that one, I'm waiting for the pullback into the moving averages, the 820 combo for another run. UCO, I'm looking for a potential seasonal run in oil. This is a 3-time leverage or 2-time leverage ETF on oil. And then there's the dynamic duo of Tesla and NVDA. Both of those have continued to do well, and we look for them hopefully to continue to do well. NVDA is searching for some support, and hopefully it finds it around the 8-day moving average. Tesla itself, again, has been the gift that keeps on giving throughout the year. Okay, just as a kind of a reminder, the reality of trend trading. Whenever you get into a chart, you want to identify the trend first and then you go and define the areas of interest or value. Those define then where you plan your strategic plan around taking, either taking trades, getting out of trades, and that's basically the essence of trend trading and or swing trading in some case. Never chase the signal, never. There will always be another day and another market. If you miss a move, so what? It's not the end of the world. And then I like the aspect, if the mechanical side of your trading isn't working, check the mental, physical, and spiritual side. They all three go together to enable you to be the best trader you can be. I know my wife helped me get onto a fitness program here, oh gosh, at the beginning of the year. And I'm down about 26, 27 pounds. I'm out there walking somewhere between 4.5 to 5 miles a day. And it has really helped me, by becoming more healthy, has actually helped me trade better. I don't know why it works that way, but it does. So here's where we're sitting with the close positions year to date. This is total profit up about $25,000. Total return on, now this is total return. This is including both what's been closed out plus existing open orders. We're up about 21.5% for the year, 5.43% on the early warning alerts. Guys, I'm thinking about putting together a special training that will, there'll probably be a fee for this, but on Strategy 3, because Strategy 3, again, continues to do well. The S&P part of Strategy 3, and what it is I hold a option position, long-term, a leaps type position, and then I sell premium against it on a weekly basis. And as you can see, the spider part of that is up over 24%. The NVDA trade on that, within just a very short time, we closed that out for a 56% gain. The Tesla position closed that out for a 100% gain. Nugget for what, 1.37, simply because it wasn't performing. And so currently we have the open position in Spiders, Nugget, and Tesla moving forward. I want to keep those going through the end of this year, and we have some modified objectives, but to turn around 50% on each one of those positions by January 2017. So anyway, that's all I've got today. I'm going to just basically say, guys, welcome, or thanks for being here. We're looking at 2017 as being a season of explosive growth. So for you, keep the egg growing, trade wisely and profitably. You can contact me or get in touch with me at these two areas, and then on the hour at 12 noon Pacific time, we'll go into the next final hour. I do want to hit a couple of things. I want to hit one more chart, and then I'll call it totally a day. But until Monday. Aloha, trade wisely and profitably. And here's what I'm looking for. TNA is trying to move up. Let's see what SPY is doing. Okay, it's doing okay. But here's what I'm looking at in UCO. Again, this is the, okay, UCO, guys, if you're looking at, I was looking at symmetry of move. From this high here to this high basically corresponds from this high to this 1271 level on oil. And so yes, Phil, it is recorded. It will be posted to my YouTube channel, which is Market Tech Talk, sometime later today. And if you attended, if you attended and signed up for this session, you'll get an email basically with the link on where to find it. But I'm looking here at is it time for oil to bounce? And I think it's getting close to that. And if it bounces, what could we expect? Well, here's what I'm looking at is basically a rebound from here. If it gets close to the to the downtrend line, that'd be a about a 33% run. But I would modify that. I could go back up to this level of resistance there, about $15, and that would give us about a 17% return. I mean, if it makes it all the way back up to the top, which would be symmetry with this move that lasts about 2.5 weeks, that would be a good trigger. So that's what I'm looking at UCO. And with that, you've got some ideas for next week. And I'll just say, God bless everybody and have a wonderful, wonderful weekend. Aloha.